We have Michi Clay from Lift Fund. She is the Regional Vice President. We have Amanda Dietz, who you already heard from just a moment ago. She is the Vice President, Senior Business Consultant for JPMorgan Chase. She is the Minority Entrepreneurs Business Banking Professional. We have Mr. Winston LeBay from the Small Business Administration, and he is a lead lender relations specialist. That's what we want. We want the money. We have Constance Jones. She is the national, and see, I love Constance because she lives in Houston. But she is the National Minority Supplier Development Senior Director, Field Services. And my friend, Robert Hines, I'm gonna sit down and let you have the mic. Robert, you are the South Region Business Banking Small Business Advocate for JPMorgan Chase. Let's give it for Robert.
And I do yard work too. Good evening, everyone. So my name is Robert Hines. I am the South Region Area Manager for Minority Entrepreneurs for JPMorgan Chase. That's why I don't have cards. I'm just like, yeah, I'm Robert. First and foremost, please give yourself a hand for just being a business owner / entrepreneur. Like, when I say that's a big deal, that's a big deal. And we're super excited to have you here. I'm going to just talk for 2 minutes, and then I'm going to turn it over to our panel of specialists to introduce themselves. I have a couple of questions, but Dee, I might change this up a little bit and have some questions come from the audience. So I'll touch on a few things, but be ready, because I might touch on you too. As we talk about access to capital, it's a term thrown around all the time. And it almost seems easy until you apply, right? So as we're talking about capital tonight, I want you to think about it in 3 different buckets. There's intellectual capital, which is what you need to know. It's clear you know about your business, but the real question is, do you know about your industry? All right? Now we have social capital. This is who you need to know. And building a team of trusted advisors is not easy because the operative word is trusted. And then finally, there's the monetary capital. Those are the dollars that's going to help you execute against a goal. But you have to know how to leverage it. We support you in that at JPMorgan through our Minority Entrepreneur Initiative. This program really helps us provide one-on-one mentoring and coaching to business owners that have been in existence for at least 2 years, generating a minimum of $100,000. Why the criteria? Because anything under that would be considered a startup. And for startups, you need special resources. We're good at it, but there are other organizations out there that's great at it, and we want to put you in touch with them first. So as we begin this panel discussion, I want you to keep those 3 buckets of capital in mind, because we're going to share a lot of intellectual capital here. And then hopefully, it'll lead to your monetary goals. So with that said, I'll start in the order in which we're sitting. If you wouldn't mind just introducing yourself. I know they already know you, Mandy.
It's me again. Amanda Dietz, Senior Business Consultant for Minority Entrepreneurs with Chase.
Good evening, everyone. My name is Michi Bruns Clay, and I'm the Regional Vice President for Lift Fund.
Good evening. I am Constance Jones, Senior Director for the National Minority Supplier Development Council.
And good evening. I'm Winston LeBay with the SBA, Lead Lender Relations Specialist. I've been with the SBA 2 years, and I say that for a reason because I was a commercial lender for 25 years before I joined the SBA. So my background is lending, and I bring that to the SBA.
That's the Winston LeBay, not just Winston LeBay, the Winston LeBay.
Exactly. Some of us just call him Winston, like Madonna or Cher. But great. Thank you guys for being here. Winston, I'm going to start with you because when you think about the SBA, a lot of people think about, PPP, EDIL. Other than disaster loans, how does the SBA support small businesses?
Hey, Robert, thank you so much for that question. A lot of times, small business owners think that the SBA lends or loans money directly. We did that with the EIDL, Economic Injury Disaster Loan. Any type of disaster loans, the SBA does loan money directly to small businesses and to individuals, right? But as far as small business, the general loan program, the 7A loan program, we guarantee the financing. Amanda mentioned earlier about guaranteeing the financing. So we guarantee up to, well, actually 50% up to 90%. So if it's an SBA Express loan, and I'll probably get into that later, we guarantee 50% of the loan proceeds. So if it's a $100,000 loan, we guarantee 50% of that. If it's the general or the standard 7A, which is a term loan, we guarantee 75%. So if the loan is $100,000, we guarantee $75,000. Now we're guaranteeing that to the lender in the event there's a default, right? And I heard Amanda mention risk. So that guarantee helps mitigate the risk for the lenders, where there's certain industries like restaurants, which are known to be more riskier. Startup businesses are more riskier. And there's some other industries as well where that SBA guarantee helps to mitigate the risk. But it also mitigates the risk when it comes to collateral or lack of collateral. And that's really what the program is really all about, helping mitigate risk with collateral, certain industries. And now, one thing it does not mitigate, it doesn't mitigate low credit scores. So I want to be clear on that. The SBA guarantee is not to make a bad loan a good loan. Okay, and I'm coming from my lending experience on that one, right? But it does help to mitigate risk. And it allows lenders to be a little bit more, I could say, aggressive, right? Take some more risk. Now, they're not going to do crazy things, right? It still has to make sense. They still have to be paid back. But again, it can help mitigate certain risk. And then the 90%, that's for the export working capital. That's a different product altogether, and that's 90%. So long story short, it mitigates risk. It allows lenders to maybe be more aggressive in their lending. It helps to stretch the payment out. Amanda said that earlier. It gives a longer amortization where it lowers your payment. It also allows you to buy real estate, owner-occupied, with 10% down, okay? So there are a lot of different benefits to it in addition to mitigating risks with collateral, okay?
Cool. And just to be clear, the SBA doesn't lend directly. You would still have to go to a bank, and the bank partners with the SBA, correct?
That's correct. So most of the lenders are banks and credit unions and fintech, which are online lenders. Well, I'll say most of the banks and credit unions are approved SBA lenders, right? And so if it's an approved SBA lender, and we have a list of all those lenders, you apply directly with them. They know the program. They have delegated authority, which means they're empowered to make decisions on their own. We don't even see the deal, okay? The only time we see it if they're not a preferred lender, and I think I heard Amanda mention preferred lender. If the lender is known as a preferred PLP lender, they make the decisions. We never see it unless there's a default. If they're not a preferred lender, then they do submit it to the SBA in California for us to take a look at it and make the decision. But yes, you're right, Robert. They go through an approved lender for the loan proceed, for the loan itself.
Okay, awesome. Thank you for that. Constance, what type of financial services does the National Minority Supply Development Council, or I'm going to just call NMSDC?
Yeah, I was going to say it 3 times fast.
Yeah.
But the National Minority Supply Development Council, or NMSDC, is a private sector 501c3 organization that really focuses on supporting minority businesses and connecting them with major corporations. So we do have a funding arm that's very similar to the SBA, but ours is called the Business Consortium Fund. And the BCFS actually guarantees 75% of the loan, and then you just have to collateralize 25%. So in that same example that Winston gave, if you're looking for a $100,000 loan, we would actually collateralize $750,000 of that, and you have to collateralize the rest. If you were looking at borrowing $1 million, it's really like a working capital loan. You can use it for a line of credit if needed, and so it still go along the lines of what Winston said. It's not to make a bad loan good, but it is to have the same type of risk mitigation in order to allow minority businesses that have traditionally not been able to borrow a loan and are doing business with private corporations to be able to have another avenue in order to do business. That's just one vehicle. That's our vehicle. But since the murder of George Floyd and the commitments that have been made, we're seeing seeing so many corporate partners come to NMSDC trying to find creative ways of lending and funding minority businesses. So Facebook, for a prime example, has a program that's very similar to factoring, where they will actually purchase your invoice and pay you within 24 hours of that invoice. There is a fee. There is a fee. And that is a business decision that you need to understand and know what that means to you and your finances. But that's just one alternative. MasterCard has another program where they actually give benefits to corporate members who actually pay their suppliers quicker using a MasterCard. And so there's so many creative activities out there right now, because this is the moment that we have to maximize on these types of opportunities that are being made available for minority and women-owned businesses.
I love that. Two things that stood out. This is our moment. Just remember that, because the lights will be turned off, and we know this. This is our moment, right? And then you have a decision to make. Every lending decision you make is a decision, and a big one. So recognize what that means inside and to your business. Is there a minimum and a maximum that you would lend, Constance?
Yeah, so our BCF actually is expanding. So it used to be a line of credit anywhere from $100,000 to $1 million. We have now raised additional capital, so we have $10 million to lend, and we're lending, and we also created a micro loan. So now you can get a loan as low as $50,000, and now it goes up to $5 million. So we actually are looking at not just doing traditional loans, but we're also looking at venture capital through another organization that we own called Triad Capital. And so it is a venture capital fund that we are raising money in order to expand and lend it out to minority businesses.
Awesome. Cool. Michi. How are you, Michi?
Hey, Robert.
Michi's to have her in the room, this is big time. She's big time. Same question for you. Big time. You big time. She big time.
You're too kind, Robert.
There must be a female Dom, right?
Hey.
I see it. We're outnumbered, but it's good. So, Michi, same question. What type of financial services does Lift Fund offer?
So Lift Fund is a community development financial institution, which means we're mission-led. So we are looking for minority-owned, women-owned, veteran-owned businesses to lend to. We've been in business 28 years. We lend loans as small as $1,000 up to $500,000, and then we have an SBA 504 product that goes all the way up to $5.5 million. But because we're a community partner, and because we have over 100 community partners that we work with diligently every day, we also work with municipalities to extend grant programs. So we just worked with Harris County and deployed over $30 million to small businesses. So we have a lot of unique opportunities. So one thing is that we provide capital. The other is that we provide business resources. So Robert talked about some of those businesses that are not quite ready to move into the traditional banking space. Then we work with you hand in hand through that process of looking at your business plan, looking at your financial, partnering with organizations like the Bridge Path to make sure that your credit is where it needs to be so that you can be capital ready and lending ready.
Awesome. And one of the cool things about CDFIs, again, community development financial institutions, and correct me if I'm wrong here, Michi, but they are governed by the U.S. Department of Treasury, whereas a bank is governed by the FDIC. So if a CDFI wanted to put together an initiative for Black, female construction companies, they could do that. And they could lend to Black, female construction companies. Whereas if a bank did it, it would be considered discriminatory lending, right? We don't have the ability to put together specialized programs like that. So CDFIs are our partners, like partner, just like she's boss, right? Like partners. We love that.
Partner.
partner, right? We love that because they have the ability to do that. And a majority of business owners have no idea, one, that CDFI exists, and two, what they do. So appreciate you sharing that. Amanda, as you think about the bank perspective along the same lines, talk to us a little bit more about what Chase is doing to increase lending to minority entrepreneurs.
That's a great question. So I talked about the $30 billion commitment, and I want to just make sure everybody understands, and I know I've made this joke, so y'all, it's like when I mentioned the 30 billion, like people look at me like, oh, she's a Mexican Oprah, like you're gonna get a grant, it's like, no, like we're not just giving away money, right? But more importantly, what we're doing is we're providing the education and resources and knowledge, right? Because if we were to just be giving away money, are you gonna know how to utilize it and what to do with it? We don't know, right? So this is why we want to teach. So what Chase has done is out of that 30 billion, 2 billion is committed to expanding our minority entrepreneur program. So, there's two of me right now, me and Brandon, he's my boy, right? And we're gonna bring on somebody else, and we're continuing to expand because Houston is the 4th largest city in the country, right? So the fact that we're continuing to grow and expand to have more people on the ground is one thing that we're already doing. So not only are we investing $2 billion, but we're committed to doing over 15,000 business loans. And what we're also doing is $750 million is contributed to our supplier diversity program, which is huge. So we are being very intentional on choosing our Black and Hispanic business owners to gain contracts from Chase so that they can then have an additional source of revenue and then get the access to capital.
Awesome. There's so much to unpack there, right? I mean, but one of the things I want to emphasize is, Amanda mentioned $2 billion. That's a lot of money, specifically for minority business lending, and 15,000 units. That's in addition to what the bank already does. So this is additional funds that's being allocated. But again, we talk a lot about access to capital. Inside of the program, it's about preparation for capital. We are not going to put you in a position where you fail, because far too many times you think you're ready and you're not ready. Y'all know the whole Mike Tyson thing with the plan, right? So it's the same in entrepreneurship. We know you need the money, but we need to know that you are ready to get it. So, with that said, Winston, from where you sit, what are some of the challenges you see as it relates to providing lending to minority business owners?
I think the challenge is really a lack of knowledge, and I don't mean book sense, that type of knowledge, but knowledge in terms of how lenders underwrite loans, how you can mitigate certain weaknesses, and in developing that relationship, the business relationship with the lender, having a conversation, being transparent, find out what type of deals those lenders do, what type of deals they don't do. Because a lot of times when I receive phone calls at the SBA, and I receive them daily, right, and emails, from individuals wanting to start a business or having trouble accessing capital, the first thing I talk to them about is, if it's a startup, do you have a business plan, okay? Do you have someone you can speak, a mentor? And so there are resource partners, the small business development centers, U of H, Texas Gulf Coast, or America's Small Business Development Center. They go by 3 different names, right? There's SCORE Houston, and then there are 2 women business centers, the WBEA Women's Business Center and the Greater Houston Women's Chamber of Commerce Women Business Center. Now, these are our 4 resource partners because we provide them with the funding so that they can provide their services free of charge. And believe it or not, a lot of businesses or individuals are not even aware of that resource. We have conversations about that, and I had an email just the other day from an individual who said, didn't know that existed. So those resource partners can help you. They won't do all the work by themselves, but help you put together your business plan, your projections. Robert said, are you ready for financing? They'll make sure you're ready, you're bankable, before you go to a bank. And not only that, they can recommend certain lenders to you based on your industry, right? So if you're in the restaurant business, right, they may say, well, call A, B, and C lenders because I know they do these type of deals. Or if you're looking for a loan that's, and this is another thing, a loan that's, say, a small loan, less than $50,000, a lot of lenders don't do small loans. It's just, it is what it is, right? But what we do at the SBA, we have identified lenders that not just specialize, but have an appetite, an interest in doing loans less than $50,000 or $150,000. And when we find that out, we keep a list of those lenders. Now, we cannot endorse them, but we can give at least 3 names, all right? So we'll give 3 names of lenders that we are aware of that will entertain, smaller loans. And then we also, Lift Fund, that's one of our best friends, right? Because they have all those different loan products, and they have technical assistance programs where they can help individuals that have credit challenges. I think I heard Michi say one day on one of the webinars that I moderated, I think it was not restoration, it was a word you used, not repair. And
Bruised.
Bruised, yeah, bruised credit. So if you have, and when she said that, I'm like, man, that's good. Bruised credit. So if someone has bruised credit, the Lift Fund, they have programs where they can help you unbruise that. No, they can help you, repair your credit. So I guess long story short, it's just a lack of knowledge, right? And then also it's a matter of finding that lender that's going to take time with you. When I was a lender, and I'm just being honest with you guys, I would take the time, really try to help that small business to a fault, meaning that I was told on many times I could not save the world, right? So I had to, so okay, let's move on. But I tried to give them all the information I have in my head, right, about how you mitigate certain weaknesses. Maybe you're starting a business and you don't have direct experience. Well, find someone that has experience. Hire them on as a key employee, things like that, right? Or there's so many different ways. But again, it's just a matter of knowledge or lack of knowledge.
Yeah. I love the way you started it in terms of just the literacy component. When you think about lending, it's a process that sits inside of a system, right? And what we never really talked about is either or. We didn't talk about the process, and we definitely don't know the system. So it's important to count on experienced people like this to help you understand the process, and they'll prepare you for that system, and that system is underwriting, right? So Michi, again, along the same lines, because you see a lot of deal flow, what are some of the challenges that minority entrepreneurs have when it comes to lending?
Capacity is really the number one. We have worked with so many organizations thinking that it was really credit. And then we get the credit north of 700, and then we realize you don't have the capacity to take on any additional debt. So I think if you don't get anything else, really approach your business based on expanding your capacity to take on reasonable and responsible debt. I think that's something that kind of demystifies the whole process. People do business with people they know, like, and trust. So how do you set your business up so that when you go in front of a lender, they know you, they know your passion, they know that you know your industry, they know that you are the expert in whatever it is that your business is, right? So they know you and they know that you know what you're talking about. They like you, you're personable, you're able to articulate and pitch. I have a client that raises about $300,000 a year just in pitching. So make sure that you're likable, right? And then also that we can trust you. So what that means is that when we're looking at you on paper, before we even see you, right, can shake your hand. If we're looking at you on paper, you don't have NSFs. You don't have any federal obligations. You don't, for the last 6 months, right? You haven't made $4 million and spent $399,000, right? So that we can trust that when we extend this grace to you, can we extend this loan to you, that you know exactly what to do with it. And that's what I see, not just in minority businesses, but just in businesses in general. We can't beat you dreaming, but you need to be able to articulate it so that we know, like, and trust you.
I I love that.
Robert, I just want to add, if I can.
Please.
I would say definitely spot on what they said, but I see three things in this market. And it's really when, where, and who. And the when is the right time to start asking for money? So one of the things that I had to learn in my journey of going through supplier development and really supporting is that I would always hear entrepreneurs say, I'm self-funded. I want to be self-funded. But in self-funding, you cannot grow. You are going to hit a ceiling and it is limiting your capacity. So when that's the mindset that you have, you are also limiting the possibilities you have in order to gain that capacity. Because when it's time to borrow money, you're not going to be able to borrow any money. So knowing when it's time to borrow the money is the absolute best opportunity and an area of weakness that I tend to see in our community. The second piece is knowing what type of money to borrow. So Michi just said you can't take on any more debt, but equity is also an option that is available to us. But you have to understand what that means in our community. So venture capital equity is an option. And so you may need to look at growing and raising funds through an equity growth vehicle and not just a debt vehicle. You really can't grow to a tier one or a $50 million, $100 million firm just acquiring debt. Right? So you have to understand at what point in my business do I need to pivot and start looking at venture or equity lending as a true solution to my capacity building. And then the last is actually knowing what vehicle to go to, right? So I used to tell people all the time, and I really hope that you got what Amanda said in her presentation, and I wanted to, I'm spiritual, so I wanted to stand up and say hallelujah. When she said that JPMorgan Chase recognized that they had some bad practices and making a commitment to change. Because you as an entrepreneur are powerful. I tell people all the time, and I'm getting a child ready to go to college, and I tell her, when you go to college, it's no longer teacher to student. You interview that teacher just like you going in for a job. That's how you should be about your bank. Right? And so Chase has just told you that they are stepping up to be a trusted advisor. But stop banking out of convenience and bank out of necessity. So go to Chase and say, how do you feel about lending to minority and women? And what's your statistics on that? And when you see it's good in your industry, you at a right place. But if you walk into another bank and they refer to you as a number, money might not be in the right place for your business growth. But just because it's convenient for you, because it's around the corner from your house, and you get to go through the drive-thru on Saturdays, that may not be where your business money needs to be. So just think about all of that, because all of that plays a part in what we're sitting up here talking about.
Let the church say amen. Jeez Louise. Jeez Louise. Man, there is so much there. That, spot on. All three of you hit it. If there was one thing that I would add, it's financial integrity. And what I mean by financial integrity is your financial statements. Just because your sister's cousin's brother took an accounting class at TSU doesn't mean that they should be doing your books. Get a CPA, get an accountant, get somebody that knows what they're doing, because your numbers are going to tell the story. Our numbers don't always tell our story. Consequently, we get the, hey, thanks, appreciate you coming in, right?
Hey, Rob.
So that's real talk.
Just to add to the financial statement piece, one of the things I used to see as a lender, not often, but there were times, and I'm sure Michi and Amanda can speak to this as well, is that you have to make a decision on, do you know you're going to need financing at some point, or do you want to just minimize your tax burden, right? And so as a lender, I would sit across the desk or the conference table from a business owner, and they would give me their business tax returns, and then I would look at the bottom line, the net income, the net profit, and say, okay, this is going to be a challenge for us, and they would say, well, I'm running all my expenses through so I can minimize my taxes, then I would say, well, I understand what you're saying, but I need to base a decision on capacity, the cash flow. So have a good, financial advisor or CPA or someone that can give you some good advice. I'm not saying that's the decision you all have to make, right? All I'm saying is at some point when you go to a lender for financing, they're going to look at that net income, not the revenue. Revenue is good, the trends and all that to see how you're doing, right? But at the end of the day, the decision it is based on net income, right? So think about those decisions. And as you said, Robert, get you a good, CPA or accountant. I think Amanda spoke to that earlier. So I just wanted to put that out there. Those are decisions you have to make. And then one other thing, if I can give a shout out to Philip Yates, I see him in the audience. You mentioned equity, venture capital, so I just wanted to say hello to you. Go ahead, brother.
Big time. Philip Yates. Attorney, Philip Yates, Houston area Urban League. Come up and say some words. I will never see you in the room and not think about that. I love it. Again, great ad, Winston. So Amanda, as you think about some of what we just talked about or some of what you've just heard, specifically as it relates to really using a bank as more than just a transactional institution, right? Where you go in and make deposits and withdrawals and that's it. Talk to us a little bit more about how you've built trust with your role. And then second part to that is, as it relates to building trust, what can a banker do? Or how should they treat or receive a banker?
Yeah, that's a great question. So, the biggest thing unfortunately, like I mentioned and Constance mentioned, she said hallelujah, and maybe I shouldn't have said maybe Chase has done things wrong, but it's the truth and we're owning it, right? We realize that especially within our minority community that we don't have the trust, right? So how do we gain that trust? Well, we just have to build those relationships and we have to change the narrative and say, we're not just the bank for rich white people, we're the bank for everybody. But you need to also realize and not be afraid to, when you go into the bank, to ask and not be fearful. And if you don't hear the correct answer at the first time, keep trying and keep trying again. And I'm not even saying you have to go to Chase and do this. Just find the bank that you feel confident in building that trust. And in my role specifically, I'm not here to cross-sell products and services of Chase. I'm just here to provide mentorship and guidance, and that's completely for free. So in this role, it's pretty easy for me to gain trust within our community because I'm just saying, hey, I'm here to help. So I feel really blessed to be in this role and that Chase is actually doing what they're doing now.
That's real talk, good stuff.
Oh, wait, you know what? I wanted to add one more thing. I just thought about that Diane mentioned.
Go ahead. No.
Oh, that's my boss, guys. No, just kidding. So the other way that Chase is building trust is that they're actually putting people in VP roles that look like me and you. Right? One of our pillars is diversity and inclusion, and they're being super intentional about actually bringing up people within the ladder who are Hispanic and Black. And this is something that they are continuing to do. So the fact that I have a VP role and I'm a Latina is such a big deal. And this is how we gain the trust of our community.
That's real talk. That's real. Look, you come out Saturday, U of H, all you're gonna see is black and brown. We're gonna run that joint. It's nice. It's a nice thing. But yeah, it really does make a difference, right? Because realistically, we need a voice. There's one thing to be in the right place at the right time. But if you're not at the right table, in the right seat, with the right question, you blew it. Right? So it gives us an opportunity to be places where you can't, and to be the voice that's not being heard. So this is why opportunities like this, really to engage with you and find out more specifically what some of the challenges are that you're facing, or when you have a team of experts in front of you that you don't traditionally get to speak with, what do you want to know? This is not being recorded, right? So we could just say anything, right? All right, let's roll with it. Any questions? Any questions? All right, got a question here.
Thank you. All right, thank you, panel, for your wealth of knowledge and all your experience. Congratulations on the new positions. When Chase made the announcement about the $30 billion, and all that sounds good, and we all know that sometimes these things are platitudes and good public service announcements. And as you said, if they're not bankable or the client base is not up to the level that it needs to be, I know it's a lot of education and initiatives that need to be where you can make people bankable. And that's going to be a challenge because you say you're not lowering your standards. And then you have the CDFIs that sometimes even with Lift Fund, the criteria is very challenging for some businesses. So it's a gap that we need to be able to fill. And I don't know, I know you're doing the education component and all of that, and I know you're just not going to hand money out. But definitely, just like with the PPP money, that was more of an economic stimulus because the initial round, a lot of people didn't have certain forms that were necessary, but it was kind of wild, wild west. So take that back to the drawing board and see if there is any way to make not lower the standards, but make it more of an open dynamic. If you're going to put $30 billion on the street, then put it on the street. Don't, at the end of the day, say, well, the people weren't quite bankable, so we couldn't put this money on the street. So we really need to create a way to bring the people to the mountain. If you can't take the mountain to them, you got to figure this out. But don't just put the carrot out there. Yes, all that to say how you're going to bridge the gap. Basically, how can we get the money in the hands of the people and not just have good initiatives and have good feel-good sessions?
I like it. First of all, good voice, brother. That brother got a voice. Yeah.
So I'm gonna take a first stab at that.
Okay.
From a
'Cause I'm going to the
resource
car.
perspective, right? Because I want to make sure that we heard everything that Amanda said as it related to that $30 billion. That's not all lending. That's not all in loans. So we need to understand how much of that $30 billion actually is going out on the street from a JPMorgan Chase perspective. But as a resource organization, how are we bridging the gap? Because we know it's a gap. One is educating the community and educating the people that need the money. I believe that Houston is so blessed because of all the local resources we have. Philip came up, Eric Goody came up from the Urban League talking about what they do. You have the NMSDC affiliate here. You have the University of Houston Small Business Development Center. You have so many resources that'll help you get bankable. But I'm a push back a little bit and challenge you as the business owner. Are you getting ready to take advantage of that opportunity? So yes, as a banker, as lending institutions, we need to understand that there is a gap between the requirements and what our businesses have. But once we educate you on what needs to happen, are you taking the next steps in order to attain on that capital? And the reason why I say that is because day in, day out, we get businesses that come into our organization that say that they want to do business with a Walmart or a JPMorgan Chase or any of these large organizations, and they ask for funding. When we go back and say, you need to do these things in order to get the funding, because we actually guarantee, so we do look at the deal, they never come back. I would say out of the 10 people that come to me on a weekly basis, only one comes back. And when they come back negotiating. I got 5 out of the 10. What can we do with that? I'm like, nothing. Go back and come back when you got 10 out of the 10. And so that's not to discourage, but that also means that when we've laid down the foundation, and because we're doing the work internally to make the change and advocate, you have to, not you directly, but the community has to help us. They have to help us with doing what they need to do in order to take advantage of that. There are some lending practices that we definitely are talking about, right? So there's some of that that's happening. I don't want to discourage exactly what you're saying, but I also want to make sure that we actually hear and understand what the community need to do in order to help us be successful at that work.
Amen.
Can I
Yes,
tap in?
you're going to hear from everybody on this one, I promise you that.
First of all, I want your voice. I just want a piece of your voice. But I agree with everything that Constance just said. For CDFIs specifically, and I didn't say this because I didn't have the opportunity, but for CDFIs, we raise our money and we borrow our money, right? So that's how we don't accept any deposits. We raise our money and we borrow our money at a lower interest rate to be able to lend. So the lending practices that you talk about are absolutely necessary to keep the integrity of the program, right? So that we can help. We've loaned over $400 million to businesses that look just like you for 28 years. We've helped over 25,000 businesses, but there has to be risk models in place to make sure that we can continue to do what we do, right? But specifically as it relates to JPMorgan Chase in terms of what Amanda said and Robert said, putting their money where their mouth is, the Ascend National Program is for Black and brown businesses. That program is not a lending program. That's a program that really looks at three pillars. Getting you management education, to what Constance talked about, getting you market opportunities, so you have customers and contracts to be resilient and stay in business and create generational wealth. And then the money piece really is last after you've done the other two. Because if you can master the management education and you know how to respond to RFP, you know what's a non-starter, you know what contracts to say yes to and no to. You have that social capital to be in the rooms, but you're prepared to pitch when you shake that hand and you only have 30 seconds. That program is a 2-year program. We wrap our arms around you. So one of the things that we have not done so well is create an ecosystem where you can plug in where you are. We meet you where you are, but we don't lose sight of you. Constance just talked about 10 come asking, and then 1 comes back. Okay, where are those other 9? How do we become more of servant leaders to go out into the community and create that ecosystem so that, again, you can plug in where you are, but we don't leave you where you are? But I absolutely agree that if we're extending that olive branch, right? JPMorgan Chase gave Lift Fund $1.25 million to stand up this program. We've generated now $20 million in 18 months in businesses that look just like you. But it's intentional. Because we understood when I was hired for this program and then got promoted to my role, but I understood because I'm a 3rd-generation entrepreneur. So I have a lending hat, but I have an entrepreneurial heart. So I understand after I saw my mom and dad start and sell and failed in 14 businesses. So I get it. We have to be intentional about, again, making sure that you have market opportunities, the management education, the team built around you, and the capital will come.
That's good. Amanda, you want to?
And I just want to add something and just to, we can't forget that Chase is a business, and it's a for-profit business, just like a lot of you in this room. And I don't think any of y'all give your products and services for free, because I'd be like, what are you doing, right? So that's number one we have to remember. And also, and Robert has taught me this, credit is short for credibility. So a bank wants to know that you're credible if they're going to lend you that money. And we're not investing in you, we're lending you. You have an agreement. And a lot of that money too is of course going to affordable housing, because it's important that our minorities build that wealth and have those assets. But a lot of the money is also going to educating our younger crowd so they can start learning, so that our future now knows what to do and how to build that legacy and generational wealth. So I just wanted to add that as well.
And, I'll wrap this up with 2 things. One kind of statistical, and then the other one's just a Robertism, right? So when you think about what JPMorgan has done already, we're 18 months into this commitment. And to your point, you're right, it was a Wall Street announcement. Now we had to figure out how to take it to Main Street. This is Main Street. This is how we take it to Main Street. In 18 months, we've distributed over 13 billion of that 30 billion, close to half. But we're not at the halfway point. And our CEO's commitment was, well, hell, if we run out of money, we have some more. As long as we're making a difference. One of the things that I learned in 2020, and I think we all learned this is just my takeaway, it exposed us. It exposed us. We historically have operated in survival mode. Give us the remnants of a pig, we'll make a meal. Y'all call it chitterlings. I'm from New York, we didn't eat that. No. Chitlins.
No, we
right?
don't call it chitterlings. Yeah, it's chitlins.
That's how it's spelled, and then you make groceries instead of buy them. But that's another story, right? But no, so, but the point I'm making is, we're survivalists, and I don't give a where you put us or what situation we're in. We're going to figure out a way to survive. That's our mentality. What we have to do now is transition to sustainability mode. So how do we walk that tight bridge, right? It's through opportunities like this. You learn about it, okay? Yeah, short answer is, we're not gonna lower the standards. Why would you want somebody to lower the standards for you? Level up. Let's get this. We're capable. We just haven't had a chance. Now we have a chance. And remember, the only thing that can change a system is another system, not an individual. So yeah, there's some systemic issues that we're working through as it relates to lending. And if you want to go to redlining, zip codes, yeah, that's one of them. But we're working on that. Simultaneously, we have to work on the other piece. So that's not a Chase thing. Don't hold me Chase accountable. That's a Robertism. All right. So great question, brother, because that's the kind of dialogue we want to have in rooms like this, because it's what we need to know. Any other questions?
Hey, Rob, just one comment quickly about Chase. So I mentioned earlier that we try to identify lenders that will consider smaller loans. Well, when we contacted the larger banks, the global banks, the Chases, the Wells Fargos, the B of A's, the Capital One, guess what? Chase was the one that said, well, we do small loans. I spoke with their SBA manager a couple of months back, and he said, oh yeah, we do loans less than 50, 20, so forth. And so I included that on my list. But to say that Chase is doing a great job. As a matter of fact, I started my banking career at Chase back 25 years ago when it was Texas Commerce Bank. But they do a great job, and I just wanted to give that accolade to you because, or that shout out, they do a wonderful job in the community.
Yeah. And just, as a matter of statistics, you just brought up something interesting. When you think about like what happened in 2020 and everybody got behind this racial equity initiative, collectively, corporate America raised just over $100 billion. Chase gave 30 billion of that 100 billion. So just think about that. One company gave a third. Nobody went to Amazon, Tesla, eBay, Google, talking about what you're doing, right? So think about that, right? You have one financial institution. The whole idea was to create something, to start something. We're just contributing it. We can't solve it. So just a thought.
I just wanted to know if Mr. LeBay could repeat the women organizations that he gave the acronym for?
Sure. So the WBEA Women's Business Center, I think it's Women Business Enterprise Alliance. Is that right? Okay, I get an A+ for that one. Okay. So that's one of the women business centers. And what I'll do is before I leave, I'll give you my telephone number and I'll email you all the contact. And then the Greater Houston Women's Chamber of Commerce Women Business Center. That Women Business Center started maybe a year ago, maybe less than 2 years ago, but they're doing a great job as well. At the WBEA is Shirley Brooks. Again, I'll give you my contact and I'll email that to you. And at the Greater Houston Women's Chamber is Shayla White. Both of them do a great job. And so I would encourage you now, I guess, focus is more on women-owned businesses, but they help anybody. They'll help male-owned businesses as well, but that's kind of their mission. So, yeah, I'm glad you asked that question. And again, I would encourage all of you, take advantage of those free resources. The gentleman in the back that, I guess you guys said had a wonderful voice, the guy in the back, that's okay. Take advantage of those resources, guys. It's free. I mean, they will help you. I know it sounds like a cliche when I say become bankable, but they help you get ready to go to a bank for financing. They're not going to send you to a bank unless they feel you're ready. They're going to help you if it's a credit score issue, if it's a business plan, if it's cash flow, or maybe how to better manage it. And they help you with all that, manage your cash flow. If it's your website needs to be redesigned, that marketing ideals, they help with all that, A to Z. I call them the one-stop capital shop, but take advantage of those free resources.
You say that you do like the 50 and 90% backed by the SBA. Do those type of loans lower the rate, or would they stay around the same even though they're, I guess, backed by another bank?
Yeah, the rates, I mean, we have a max on the spread, like, Wall Street Journal Prime Plus. And so depending on the loan amount and the program, there's a certain spread that lenders cannot go above, like let's say Prime plus 4, I'm just using an example, right? So we do give guidance on the max, and they have to be within that range. So regardless of which bank you go to, they have to stay within that range. Okay?
Cool.
Can I just say
Sure.
So what we also do is, because we have tons of products, so we also look at the product that's best for you. So if there's a lower rate available, maybe it's a funder, to Robert's point, that just says, I want to lend to, women of color in a certain industry. The rate may be 3%, up to $50,000. So we always look at the products that we have available and then, guide you towards whatever product makes sense.
You got it, because I got an extra, I don't want to tell you, but Jacob in San Antonio and a couple other folks helped us out earlier this year, so thank you. It works.
You're
Y'all
welcome.
all this work.
Thank you.
A testimony, yes.
You spoke about building a relationship with the bank. At what point in your business and who within the bank do you build that relationship with? Since COVID, it's make an appointment online, you're talking through a glass, so how do you build that relationship and when is it?
I love that question. So, before you start the business, like way before you start the business, right? Preparation and opportunity intersecting is success, right? Oftentimes, we wait till it's too late, or we wait till there's a need. I'll give you an example. I think it was Constance when she was, or it might have been Constance and Amanda, when they mentioned lines of credit. The best time to borrow money is when you don't need it. Because that's when your financials are in the best shape. It's the same thing with starting a business and building a relationship at the bank. To your point, yes, COVID was a dynamic in and of itself. But inside of most branches, you have a banker that specializes in business banking. They know all the different accounts, they know all the different types of loans, and they have the ability to facilitate a new account opening or a loan. While you're going through that process, again, like Constance said, interview them. So tell me a little bit more about what B of A, Wells, Chase, name the bank, is doing for small businesses. You don't necessarily have to classify yourself as a minority business. They see that, okay? So you want to know what they're doing for small businesses, how they could support a business like yours, what resources are available for a business like yours. It gives you the opportunity to make the decision. And then you ask for a card, you ask for a number, and you check in. One of the things that we're doing to kind of stimulate some of this relationship building process is like the event on Saturday at U of H. That's a great opportunity for you to show up, learn a little bit, but more importantly, meet other business owners. We have another one coming in October called the Business Insight Seminar. That one's going to have probably 250 to 300 businesses in attendance. We'll do it more than likely downtown at one of the large hotels. We're going to feed you breakfast, not Danishes. You're going to get breakfast, like eggs, bacon, toast, coffee, juice. We're going to work on the grits. I said the same thing. I said, look, we got to have grits. And if we could afford the shrimp, I'd like that too. But no, so we want to do this seminar because what we want to do is we want to, one, let people know, yo, we're open. We outside. Like, yo, come on. Join us, learn something, right? And there's several of those coming. Obviously you can access it on chase.com. We have a minorities entrepreneurs page that we'll start putting some of these events on. But long answer to your question, it's really as soon as you start thinking about the business. That's where you want to start building your team of trusted advisors. You might need an attorney, CPA, someone in risk mitigation or insurance, a banker. Okay, those are important individuals to have on your team.
So while Robert's walking to Diane, I would say from a certification perspective, that's why we ask that question on the certification application. We ask you for a banker. And the whole notion is because we want you to know that it's important to have a relationship with your banker so that when you come to us and ask us for money, we try to work with your banker, because we figure that you've established a relationship with them, so it's not a cold call, it's a warm call.
Okay, this is a Zoom question. So hey, Zoom family, thanks for sticking with us. We touched on this just a little bit, but let's just go a little deeper. This entrepreneur wants to know how they gain access to a mentor and the capital in order to launch and scale my business, and should I have a full-length business plan and be prepared with that before asking for the capital?
Mandy, I'm gonna give that to you.
Okay, so there are different ways. The easiest way to gain access to specifically a mentor through Chase is going through chase.com/minority entrepreneurs. And this is where you can sign up. We call it our minority entrepreneur landing page, and all these requests get funneled to our senior business consultants. Now, I do want to mention that don't only feel like you have to get a Chase senior business consultant. There's so many other non-for-profit organizations that provide mentorship, like Women's Business Enterprise Alliance, like the Urban League, like the Greater Chambers of Commerce. So there's so many opportunities to gain mentors in different ways. What was the next question?
Business plan.
Oh, yes. Okay. So, of course, you should have a business plan ready, but through chase.com/start grow, you can see all 3 different types of articles, 9 steps on how to write your business plan, why you should write your business plan. This gives great takeaways on what should be included in the business plan. My personal advice, usually you don't want to make it too lengthy. When lenders are looking at business plans, they're mainly looking for certain things, right? Your target audience, your purpose, your marketing, and your projections, right? So what are you going to plan to make? And is it realistic as well? The Small Business Development Center and SCORE have programs where they can help you write out a business plan in your specific industry.
Awesome.
And Robert, if I could just add one comment about business plans. A lot of times, small business owners, if it's a startup, you will need a business plan, right? But everyone needs a business plan. If you own a business, and you've been in business for 3 years, 5 years, whatever, you should have a business plan. That's your roadmap, right? That's something you can look at 3 months down the road and see if you're on track, if you need to pivot. So I always encourage individuals, small business owners to have a business plan, regardless if you're a startup or not. And I just want to put that out there because I was interviewing someone today for our upcoming Emerging Leaders class, right? She's been in business for years, doing about $4 million in revenue, and she has a business plan. And she says she looks at it every couple of months, she'll pivot if she needs to pivot. And I applauded her for that because I encourage individuals, small business owners, have a business plan. Use those resource partners that Amanda just spoke to and I mentioned earlier, okay? Or if you have, a CPA or someone that can help you, they're gonna charge you, but use those free resources. And so I just wanted to leave you with that. Okay.
Awesome. Yeah, don't use your sister's, cousin's, brother's, friend
use your uncle
who
in
took
the
the marketing class to write your business
Theos
plan.
and Theas.
Right. Guys, thank you. Winston, Constance, meet you, Amanda. Thank you. And thank you guys. We appreciate the attention, the questions. It was all very good. Obviously, we're